Alright, so it's currently the third chapter of this whole ICC series. I'm making a whole documentary about my journey for ICC. I've been trading it for about 5 months and I've had one profitable month. Out of the 5 months, on month 3, we turned a profit and then we switched back. So the key turnaround from this point on is mentality and psychology. Every time I make a trade, I need to make sure it's an A+ trade. I also need to make sure that I'm mentally and in all ways, I need to be ready to execute right. And if it's not within the range of execution, we either wait for it or pass it up. So with the current session, so price for Bitcoin right now is sitting at 75,800. The second video that we made, price was sitting just above this range. It was like 77.5K and it was just floating around here. So if you were to look at this without these couple candles, so like from here, you would probably assume that price is starting to build momentum to the upside. Well, what if I told you that that was just an indication and price ended up failing, which in hindsight, I mean, it's kind of obvious, but in this certain range that we're moving on a macro scale, Bitcoin was already on a downwards trend. It was already bearish, right? There's a whole lot of structure here on the daily. And what happened was, if you had trade the daily and consider these as tops, right? So let's go ahead and mark that out using ICC. You don't even have to use ICC. You can use any sort of trading method, to be honest with you, if you're swing trading. On the daily, right, because the higher time frame is the strongest, you're noticing a strong resistance on the upside. So sellers are in control here. And you're also noticing that buyers are losing control in this range. So this would have been the indication for the daily. However, on the 4 hour, if you zoomed in, this was an easy tell of indication for the 4 hour. So it was blatantly obvious. You know, buyers got stopped out here, swept here. Sellers who decided to trade the first indication got swept out here. So sweep, both sides, consolidation zone, don't trade. This was the correction phase. And then after the correction phase occurred, price, if you scaled in, this was due to the Clarity Act. Prices, if you scaled in, decided to move downwards, and there was no friction whatsoever. Sellers took control the entire way through. Now, I didn't make this trade because this was technically on the 4 hour a higher high, and typically, like, it really just depends on the way you approach the continuation and correction phase, because typically, if you want like an A+ setup, you want everything to be clear and decisive and with conviction. So all the 4 hour did was make a spike, a higher high, swept these guys. Really, if you identified it as a liquidity sweep for both ends, this would have been an attractive trade at the end of the day, and you would have had a short position here, which would have set you up for stop loss right above this range. And to be fair with you, like, this would have never been touched in the first place. Even if I didn't see any of these candles, like, Bitcoin price moved up here and attempted like 1, 2, 3, 4, 5 attempts just to break range, and it just kept going lower and lower, right? And so this would have been the obvious trade. And then had you targeted the daily, because price was indicating that the daily was turning bearish, and then the 4 hour just confirmed that. So if you know the 4 hours confirming that, all you needed was the 1 hour and 15 minute. But really, in a sense, you didn't have to use the lower time frame unless you really cared about like the entire confirmation, like on the lower time frame. So like what I mean when I say confirmation is this would have been the high, right? Because we're using the 15 minute. So 15 minute, I would never use this on its own. So this would be the high. And every time buyers stepped in, it just got lower and lower. Look at this range. Buyers tried to step in here, rejection. Buyers stepped up here, rejection, right? And there's no key breakout from this point. So there was no indication of buyers coming back in to possibly make a third, fourth attempt back to this range, which was the resistance. So on a macro scale, sure, it would have been more risky just to take the trade like out front. I completely just skipped this trade just because I didn't feel confident about the whole sweep. Plus the Clarity Act, hence was right in this position, which is why this area got swiped, and this area was what was it? Price was here, indication Clarity Act happened, sweeps here, makes lows. Skip that. So now we're here. The play that I just made was I understood that tying it back to the whole structure, Bitcoin was already bearish once it broke out from these levels. That was confirmed. On the 4 hour, this was a confirmed downtrend. And I use, if you're noticing this trend line, like I use this just to see where Bitcoin is possibly heading towards for take profits, right? So price decides to rally, right? It consolidates a little bit here on the 1 hour time frame. This would have been a consolidation zone. And when it comes to consolidation zones, you don't want to trade them. And imagine if you took a trade here for a short. Well, if you took the short trade here, you probably would have, let's see, you definitely would have sold somewhere around here. And that would have been your net profit, which really was, it would have been a really shitty one if I got to be honest with you, which is why I also didn't take it. Like, what is that? So I think this is a 1. I need to change that color. What was it before? Orange? No, yeah, it was let's do it orange. Okay, 1.1. So that 1.01 is absolute shit. The short that we're trading here is a 1 to 3 because we're targeting a key point, a key number, which is like a range basically. So 75,000. Let's go back to the 4 hour. So Bitcoin sweeps all of these highs, right? So we're making lower lows, lower highs, lower lows, lower highs. Sorry, low lows, lower highs, lower lows, lower highs, lower lows. Or I mean, sorry, this is a higher low, right? So this is an indication. It's a sign. It's not a clear indication if you are talking, if we're talking about ICC. It's just a sign that it's slowing down. Like sellers are getting exhausted, buyers are starting to step in. Like this is the next point for buyers to start using momentum from previous chart, right? So buyers step in, right? If you solely trade off the 1 hour, you are probably just going to target either this high or this high. Granted, the RR isn't attractive. That would have just been a retarded trade. What you would rather do is scale out to the 4 hour or even the daily, since the daily's already confirmed a downtrend and the 4 hour is basically bearish, right? There's like this structure is a major key level. If I woke up and I spent 10 seconds looking at this chart, I already boxed out. Like when I woke up before I made this trade, I was like, I'm going to box what I see are the swing lows and the swing highs, basically psychological areas. Not even psychological, tangible areas where it's super obvious that there's a key resistance level and there's a key support level. And so I'm marking this to say if ICC is applied in this example, pretend none of this happened and price broke out here. That is a strong telltale to me, right? Because it's a probability game and you want to have the best probability every trade. This is a stronger probability, this indication, than whatever the hell happened here. This, even though it broke these lower highs, technically, this is an indication, very much technically, and that's completely fair, right? Even up to this point before this candle, technically, this was bound to be a bullish reversal. What I took in mind was bears are in control, sellers are in control because of the daily. Daily's on a confirmed downtrend. 4 hour downward structure indication. I said, look, I'm gonna take the bite that this is just a sweep. Buyers want to hold out. I'm willing to bet after using a bunch of boxes, after checking boxes, so checking that the 4 hour is only, I looked at it as though this was an indication, right? But it's also going to be, what is it? If we confirm the 1 hour, this will be a crazy attractive zone if we use ICC on the 1 hour to retarget the lows. In fact, we would also retarget the continuation of this entire trend, right? Hence why you don't see the TP with, I marked this blue line as the 75K. This is the TP that I would initially sell off from. I took partials here because we hit the buyer zone and I didn't know if buyers were going to step up. And clearly they absolutely got destroyed. So because buyers got destroyed, I know for a fact that the next key range would have to be a specific psychological number, which usually it's just something simple like a rounded number. So 76 got blown out, 75 is the next round number, right? Or 74 even, but 75 based off of previous data implies that buyers will step in once we get down to, once price decides to range itself in this area, right? So taking a look at the 1 hour, let me go ahead and delete this shit. Taking a look at the 1 hour, what I use is what everyone should use when they use ICC is specifically trend lines, right? And you have to understand, use the first two, I think it was the very first lesson of the course, which is literally the most kindergarten shit. Use trend lines and that's it. And then understand where trend lines are, right? So let me just mark it on the 1 hour, for instance. So I would say for the 1 hour, this is a valid way of approaching it. This is how I see it. I'm just making it very clear. On the 15-minute, I would consider this like a high and a low. But what you're seeing me mark right now is every single high and low on the 1 hour. That's what I'm marking. But on the 4 hour, all you're seeing is a double top, right? Really, if you trade TGR trading, for example, that's a SMT, right? And then you would just trade the inverse, and then you would entry on the equilibrium. But that's not what we're doing. We're using ICC, right? Double top is still a bonus when it comes to what's it called? Bearish trends or bullish trends, to be honest with you. I sort of have that as a checkbox in a sense that I know that as long as price has applied the ICC, as long as the strategy remains true, ICC remains true, the double top is just a bonus, because then if you look at the chart, it's always respecting the high. Like if we decide to include the double top, it's always respecting the high. And then if you look on the 1 hour, so I marked the highest point included with the wicks, right? The candles represent the most amount of trading volume. The wicks don't really have a telltale unless you're scaling into the lower time frame. So use the 1 hour because I want confirmation of a bearish trend on the 1 hour, which is this, to be very clear. I want, oops, did not mean to do that. This. So I wanted confirmation on the 1 hour that price was going to illustrate this example. And then really you can also use the 15-minute, but if it's super obvious on the 1 hour, like let's just look at this. Let me identify the boxes. Here's the box for the resistance range. This is the box that represents price when it broke out to make the higher high. In fact, the high is high, right? Because pretend price is bullish here, which it is. So it made a new high, higher low, higher high, higher low, higher high, higher low, lower high. Technically, you can also use this as an indication where price just went below this box. Really, you can. Absolutely, you can. You know why? Because even when it came up, it respected, the correction respected the previous highs. As in terms of us, in reference to us, like targeting lows, it's respecting the previous highs, so it's making lower highs, which is what we want. And then price decides to come into the indication range, the range of entry, which is the best range to, and the only range to decide to make a trade. If we burst it out, like if price went to here, don't go into the trade. If it's here, don't go into a trade. If it's here, don't go into a trade unless you already know what you're doing and the math is mathing, right? Fundamentally, only go in during within this box. This is your indication box because it represents the indication zone, right? And it's only in the zone that you buy in the continuation phase, which is over here. You buy the continuation phase once you confirm that price is no longer breaking out from the previous range. It's respecting the recent highs. So when I say respect, because it's respect to the trend that you're what is it? The trend that you're projecting. So it's, you want it to go down, you're shorting it. If price is respecting the trend, so every time it goes up, it rejects the high. When it goes up again, notice over here, it rejects the high, right? You could have just kept following this method. You could have just kept following up with price, and then really this was like the best example. Like it just kept rejecting the highs. So it got clear, the picture became clearer and clearer for you to determine like, hey, this is an attractive trade. Let me just make sure the numbers are good, the RR is perfect, and then I'll hop in the trade once it reaches a continuation phase. The only way for price in ICC to be determined as a continuation phase 90% of the time. The 10% is when you're really freaking good at this, when you're like size level, right? The only time you should be trading ICC is when price is within the indication range after correction. So it's indication, correction, and then once it hits the continuation phase, aka back here, right? Could have been any of these, to be honest with you. This was just a perfect juicy ass, like, look at price, like a perfect ICC, you know what I mean? Once it gets into this box, then you make the trade, given, right, given the maths. So the stop loss, I put it above the first correction zone. That's perfectly fine. If you want to put it here, you are more exposed to a sweep. If you want to put it here, you're even more exposed to a sweep. But at the same time, if price continues to respect the recent highs and makes lower highs, you could definitely make the trade here or here, to be honest with you, right? I went for the safest route. I chose the short with the stop loss up here because I know that even if my stop loss is extremely conservative, it's above the highest range, right? Oops. I know that TP is down here, which is way lower than anywhere here, which would represent a 1 to 3. 75 is it's the natural level. It's like the next level where buyers will psychologically hold up, which grants me a 1 to 3 price range, right? Versus here, like I took partials here because this was the range in which buyers could have stepped in, and that's perfectly fine. Like buyers definitely could have stepped in here and here, but what do we say about the higher time frame? It's already confirming a downward trend. The daily's already confirmed bearish. 4 hours confirmed bearish at this point. What was it? No, it's not. It's in a continuation. Sorry. This was the correction for the 4 hour because it was already in a downtrend. Every time it makes a new low, it's an indication because it's a new low. Even though this is a new high, it's still a correction phase for the 4 hour. All you had to do was retarget the next recent low, which was this range. And because there was already a lot of momentum, this was the proof that we can get back here. I used the momentum on top of two checkboxes. The daily is downtrending, the 4 hours downtrending. I used two checkboxes to say, you know what? Price could go even lower. I'm willing to take that risk because the RR is attractive, because the 1 hour is attractive, and because the daily's already down, the 4 hours already down. Hell, even the fucking weekly technically is still on a downtrend, to be honest with you. Even though this is an indication, like, I'm taking the trade. You don't have to use the weekly at all. It's just that extra checkbox, right? It's a probability game, and the probability of price hitting 75. Look, when I finish this video and it's out, it'll probably be 75. So that's the update on this trade, and I hope I explained it clearly and simply how I applied ICC with my own spin on it to improve my probability in terms of getting take profit, right? Getting the TP. I'm gonna wrap this video up here, even though price hasn't hit yet. By the end of it, or even by the next video, I'll make sure to document it because it is part of the journey. This will probably also be, under my circumstance, my second or third last trade. I'm gonna cap myself like around 2 or 3, whatever is the most valid. I need all the check boxes, right? And this is the first legitimate trade of the month that I've made. So, hey, some months there are no trades. Other months there might be one or two. That's the pace that I am deciding to go with moving forward. So, I'm gonna catch you guys in the next video, and I think we'll review this trade once it, once it takes its course. So yeah.